In this video, we're going to discuss some more method setup scenario visualization. Have you been doing any of these on your own? Taking a bar chart and then drawing a labeled line drawing representing the chart and the trading scenario. Remember that this is what you want to do, work on different trading scenarios versus simply redrawing charts. Along with this, and we are going to be doing this in future videos, we discussed doing scenario exercises for things that are continually giving you problems. Specifically, can you identify a situation where you are constantly trading and almost always losing when you take the trade? If you're going to correct this, it is going to come from being able to visualize what you are doing real time and that you are about to take the trade, which is the problem. What better way to work on things like this than being able to draw what you are doing wrong and why you shouldn't be taking the trade, and then drawing what the method way to take a similar trade would be. This, of course, assumes that you think your trade is something that it isn't, versus ignoring method and knowingly taking non-method trades. Before we discuss these charts, let's first discuss scenario drawings and the following. Are these drawings realistic? If there is anything that may be unrealistic, that would be the visualization of each trade reversing into another trade setup versus reversing without setup or reversing into a period of consolidation. However, there are plenty of two-way swings where one setup ends with another setup as a reverse, and those other two situations do lead to a next trade decision. Is there a continuation trade after no trade setup in the initial reverse area? Is there a consolidation-related trade setup? Both of these give very important scenario work. Just consider the number of times you get the following situations. Chase after the initial reverse and lose, and then also don't take the next method trade after that. Consolidation pivot trading or breakout trading without a setup, and that loses as you don't hold your trade on a retrace back below the pivot line or back inside the consolidation after a breakout. So I would say the answer is yes. The drawings as we have been drawing and discussing them are realistic and beneficial for visualizing the method concepts you should be looking for while trading. As well, they can also be used to visualize the things that you want to avoid, those being your filter scenarios. Just remember, though, that drawings are not chart replacements. They are chart and scenario representations. You cannot trade from drawings, so you have to be able to associate your drawing to an actual chart. But with chart reading real-time a problem in general, and looking at individual chart bars that have no real meaning by themselves a problem, in specific, having a way to better see what the chart and bars are showing you is very important, and scenario visualization can help do this. Now look at the charts. You can see that there is a method setup. PMD start point. A PMD is a price momentum divergence, meaning that price has made a higher high when momentum made a lower high. This is called a start point because so many reverses begin as a PMD. Diagonal breakout potential. This is typically what may be called a trend line, but I refer to the diagonal of the previous swing versus a trend line that may cross multiple swings. Initial reverse, price failure breakout with MEX flow. The blue line is the price channel where the reverse occurs and is called a failure breakout at the blue dot when the breakout occurs with MEX flow. You can see this indicated in the blue box below the chart where momentum is red and the blue and purple lines are moving down. However, do you know that in this method you can't take this trade? And do you also realize that those bars after the reverse are definitely meaningless individually, but as a group of bars they give a pattern that combines with additional setup components and gives a good buy setup. Now look at the right chart and the drawing below and the various scenarios that you have. Filtering and why a method setup cannot be traded. Managing. What are you going to do with your open trade versus the typical decision of simply exiting when the indicators reverse. Patterns, and how seemingly meaningless bars actually do have meaning in combination. Trade setups, and seeing them real time where they can be more than something that may appear to happen so quickly that it can't be traded. is a filtering scenario, a filter being something that keeps you from trading a setup that you would typically trade. The key to trading this chart is the blue line, which was left side resistance that is now right side support. There just aren't any odds selling directly into support, even though the setup itself is a method setup. So there is no sell that can be done at the yellow dot, but part of the filtering scenario would include a trade that can be done as a failure of the filter. However, that also never occurs, as any trade after the initial reverse would always be into support without a failure setup. But what about management of the open buy? You essentially have three choices: exit on strength at the PMD high, price hold for support, exit on the indicator reverse. Regarding these decisions, you could determine a scenario for consistent usage. For instance, if you are in a trade that is a certain size bigger than the average and that goes to a PMD extreme, especially if it syncs with a left side price, you will exit your trade on strength instead of trailing. For price trailing, you can make your decision based on the same filter decision that keeps the yellow dot from being a trade. It would make sense that if you are filtering an entry, then you have a similar filter for an exit. Simply exiting on an indicator reverse only is what I would typically like the least. It is a decision that will incur giveback that exiting on strength wouldn't have, and it is an exit that ignores price holding, making it a problem for trailing if you aren't going to use the price that can hold your trade. So if you find yourself exiting trades only to have them immediately go back in the direction of your trade, then I would suggest that you study if you are indicator exiting only, and if yes, then determine when exiting on strength or price holding are better decisions. The green dot buy begins with what we have discussed as a start point reject initial reverse. Your training site has a number of videos both on start points and the start point reject initial reverse combination. When this setup occurs as a resumption of a left side directional swing and has continuation versus being done into consolidation, then this is a setup that I like a lot, as it is a setup that has very good odds of profiting. The difficulty, of course, is taking a trade on the initial reverse, and in this case, after staring at those bars after the yellow dot, one after another, and not becoming desensitized to anything that could become a trade setup. But those bars make a trading pattern. It is called a bull wedge, and if you're going to do a resumption initial reverse buy, this would be a very good pattern to have combined with the rest of the setup. You can look at the drawing for this scenario. Consider it to be, when can an initial reverse be traded? Selective start point reject. A resistance to support shift line like we have here for the start point in a resumption setup is the best. Bull wedge pattern shown by the purple line connecting the highs and the yellow line connecting the lows. Note how the line connecting the lows is flatter. This is showing a weakness in the attempt to go lower, which is a good thing preceding a buy. PMD low at the start point, diagonal breakout potential, additional breakout potential through the previous PMD. If you are ever going to trade an initial reverse, having a setup combination like what is being shown here is the time to try it. There is certainly a lot more going on here than a series of sideways, overlapping, and meaningless price bars. This concludes this video and the various scenarios that were discussed. Again, remember that the object is not to take your charts and simply redraw them. You want to work on various trading scenarios and how method is related to them, and then being able to match the scenario drawing with your actual charts and that scenario as an exercise for better real-time visualization and decision making.